Hello everyone, it's Peter Schiff. It is Saturday, August 7th, 2010. Well, another week came to a close yesterday. The highlight, of course, was the jobs report, or rather the lack of jobs report. We actually lost jobs for the month. Of course, the net number was negative because we laid off a lot of temporary workers that the government hired to do the census. But still, private sector added not nearly as many jobs as had been forecast, and of course they also revised down the number of private sector jobs created over the previous few months. And Wall Street has continued to be reminded of the fact that the economy is not growing, the stimulus is wearing off. Nobel Prize winning economist Stiglitz was recently quoted in Bloomberg as stating that there is no question that the economy needs another round of stimulus. Right? No question. Except what Stiglitz wants to do is he wants the government to target the stimulus. See, he says the last stimulus didn't work because it wasn't targeted, that the money was just spent, and that the government has to target it to investments, in things like technology, infrastructure, education. In other words, Stiglitz is a socialist. Stiglitz believes that the government should be allocating investment resources, not the private sector. After all, where does the government get the stimulus money? It has to take it out of the private sector. So what Stiglitz is saying is he doesn't believe that the market will do a good job of directing investment capital, of figuring out which businesses should be funded and which should not, that rather than decisions being made in a free market, they should be centrally planned by government. This is somebody who has a Nobel Prize. Again, you've got these Nobel laureates like Krugman, now Stiglitz, coming up with these ridiculous arguments to try to justify government stimulus. Instead of saying the stimulus isn't working because it's bad policy, that we don't want a government stimulus, we want a market stimulus. I mean, look at all the countries throughout the world that rely on government stimulus, that rely on central government planning. They always promise, they have these grandiose promises and these 5-year plans, and they say if capitalism doesn't work, the government's going to do it, we're going to take over, and it's always a complete failure. It doesn't work. Stiglitz still hasn't figured this out. There's a whole list of people, I guess, who should be given back their Nobel Prizes. Maybe the Nobel Committee ought to rethink this whole concept of a Nobel Prize. Maybe they ought to stop giving them and just think of something else, because the people who they've been handing them out to are completely clueless about the very basics of the science of economics, which was really, pioneered by Adam Smith. I would suggest that Stiglitz go back and reread Adam Smith, because he obviously has no understanding. And, I have a standing offer, I guess, to debate Paul Krugman. Joe Stiglitz, if he wants to debate me, no problem, anywhere, anytime. I don't know if he's got a speaking fee, but I'd probably pay that one as well, just for the opportunity to expose these guys for what they are. Of course, I've been talking also about the weakness in the U.S. dollar. As the week came to a close, we now have 9 consecutive weeks of dollar decline. Now, this is not a record. Apparently, the U.S. dollar dropped for 11 consecutive weeks back in 2004. So, we'll see if we can break that record. I think there's a pretty good chance that we will. The dollar index closed at 80.4. This is the lowest close of those 9 weeks. And I think there might be a little bit of a bounce for the dollar. Maybe it drops as low as maybe 79.50. I would not be surprised if there was some type of a bounce in the dollar. I don't think it'll be a high bounce. It'll be more of the dead cat variety. It'll be difficult for the dollar index to even get back up to 82. Maybe we will form the right shoulder of a head and shoulders top and ultimately collapse through the neckline and make new lows below 70 on the dollar index. You never know, maybe before the end of 2010. Of course, it's possible that the dollar is so weak that it can't even eke out even an emaciated right shoulder. We could just cut right through where the neckline might be and just go straight down. I mean, I don't know how oversold the dollar is. To me, it seems like the decline has been very slow and orderly, although it's been consistent. But I haven't seen any real big sell-off days, which would indicate maybe a short-term bottom or some type of capitulation, and that would lead to a rally. So who knows? I just would not be buying the dollar here at all to try to play a short-term bounce. I would still be getting rid of the dollar, actively shorting the dollar if you are inclined to speculate. Also, the opposite of the dollar is what's happening in commodities. Oil finished down on the day, but still closed the week well north of $80 per barrel. I think the chart looks very good. Look at the agricultural commodities. Wheat has been on fire recently, but other ags have been rising as well. Corn, sugar had a nice day. So we're starting to see commodity prices picking up. All of this, again, is the result of the inflation that the Federal Reserve is creating. And of course, you still have a lot of people worried about deflation. They still do not understand the realities of the situation. They really don't understand what inflation and deflation are, what the causes are, why prices rise and fall. And so they're continuously looking in the wrong direction. And I think, this has been this big head fake, the rally that we had in the dollar. In 2008, I see more strategists who are saying the dollar is going to rally because the global economy is going to slow down, and that slowdown is going to cause the dollar to rise. Well, why should it? I mean, yes, it rose in 2008, but does that mean every time there's a contractional economy, the dollar is going to rise? I don't think so. I think people who are drawing that conclusion are drawing the wrong conclusion, and if they invest based on that perspective, my feeling is that they are going to lose quite a bit of money. Also, there have been rumors recently circulating that Obama is going to be ordering Fannie and Freddie to forgive portions of loans, of mortgages. Now, this is going to be a terrible precedent for the government to be setting here, with moral hazards galore. I mean, first of all, this is probably going to be packaged as a bailout for Main Street and to help maybe the Democrats get reelected in November. But, of course, not everybody's going to get bailed out on Main Street. What if you're a renter? There's no bailout for you. This is only a bailout for homeowners. And again, not all homeowners, just irresponsible homeowners. I mean, what if you're a responsible homeowner and have a very little mortgage? Well, you're not underwater. The bailout is only for people who owe more than their houses are worth. So if you put a large down payment or you own your house free and clear, you don't get a bailout. And of course, a lot of the people who owe more than their house is worth, the reason they do that is not necessarily because they overpaid for their house, because they use their house as an ATM machine. They took out cash advances or home equity loans to take vacations, to buy cars, to buy appliances, to just generally live beyond their means. Why should they get bailed out while their more frugal neighbors who didn't do any of this, who don't have the fancy car, who didn't put in a swimming pool, who didn't take that European vacation, they don't get a bailout? And what is the moral hazard that the government creates? Get in over your head and you'll get a bailout. So what's next? Should we bail people out who owe more than their cars are worth? After all, they might not make their car payments. What about people who have lots of credit card debt? Don't they deserve a bailout? What about people who have a lot of student loans? Let's bail them out. Yeah, let's bail everybody out. What's the message that we send to Americans? Go into debt recklessly. Don't save. Don't be responsible. Because you know who has to pay for the bailout? The people who were responsible. It's a transfer of wealth from the people who did the right thing to the people who did the wrong thing. Right? That is the worst signal you can do economically. And also, people think this is going to be good for the real estate market. It's going to be terrible, because what's going to happen if you reduce people's mortgages so that they're no longer underwater? Maybe you give people equity who never had equity. Maybe they bought with zero down. The lower the mortgages, the more likely it is that these homes are going to be for sale. I mean, imagine if nobody had a mortgage, a lot of people would go to sell their houses. The only reason a lot of houses aren't for sale right now is because people owe more than they're worth. So what this is going to do, by reducing the liabilities, it's going to bring more houses onto the market, put even more downward pressure on home prices. And you know what? Now even more people are going to be underwater and in need of a bailout. Anyway, that's it for today. Take care, everybody. I'll try to blog again soon. Have a great weekend.